Given the considerable gains that the stock market has made over the last number of months, I know many are wondering, when is there going to be a stock market crash? And certainly the volatility that we have seen in the market over the last couple of weeks gives me a little bit of an increased concern that we could see some increased selling pressure in the near term. Now, the question I want to answer in this video is, how can we profit from that? You see, over the last number of years, managers have created these derivative products that allow us to profit when the market goes down. There's inverse ETFs on the indexes, there's inverse vehicles on individual stocks, and then of course there's volatility ETFs that go up typically when the market goes down. So in this video, I'm going to describe what those are, show you how to research them using ChatGPT, and then I'm going to show you what to look for in the charts to know when it's time to take advantage of this opportunity. Now let's jump into a slide here just to summarize some of these key points. There are many inverse ETFs and stocks that will go up when the market goes down. And because the market goes down much faster than it tends to go up, these represent a really great trading opportunity, but it only comes along once in a while when there is a sharp market sell-off. Now, one thing you have to be aware of is with these inverse ETFs, there is something called time value decay. Because they are rebalanced every day to maintain either the leverage or the inverse nature of the fund, what you will find is that they're really just short-term trading vehicles. These are not things you want to hold for the longer term because they don't go down, or they will go down over time simply because of the time value decay, because they're getting rebalanced every day. There's videos on YouTube that explain this. Just trust me to say, do not hold these longer term. It's only a good short-term trading vehicle when the market is moving down sharply. And the great thing is, these will move up very quickly when there is a sell-off in the market. I'm going to show you how to find what they are, and then I'll show you in the charts what to look for. So if we jump back here, there's also these volatility ETFs, as I said, the VXX, the UVXY. But let's just jump into Stockscores, my website, and I'm going to show you just a sample of one of these. So this is SDS. This is the inverse ETF for the S&P 500. And you can see that it's been going down month after month after month after month, and it actually has been going down a lot more than the stock market is going up, and that's because of this rebalancing effect. But I want you to just focus in on the last 5 or 6 days, because we had a sharp sell-off in the market 6 days ago, and when that happened, this jumped up considerably. You can see the big run to the upside here. So that's the kind of thing we want to take advantage of with these inverse ETFs. And this one is a leveraged inverse ETF, so it goes up faster than the market goes down. I'm going to show you in a moment what to look for when to buy or sell these things, but I just want to show you how I look for the symbols. So I just went into ChatGPT and I said, give me a list of the common inverse leveraged ETFs. And it spits out a list, and you can continue to ask it questions. But for example, inverse on the S&P 500 that's not leveraged, so this has just a -1 relationship, is SH. So then you can go to Stockscores and punch in SH, and you will get the non-leveraged version of that. If you wanted the leverage version, I'll tell you that that symbol is SDS. Okay, so this will move quicker than the overall market. You also have SPXS, which is 3 times leveraged inverse. Now there's also one on silver, there's one on gold, so I can go into ChatGPT and ask that question. Here is the one for silver, and we'll see that it's been going straight down for a while. But because there was some weakness in silver at the end of the week, this past week, I'm a little bit concerned that we could see some selling pressure in silver, and this will be the vehicle to take advantage of that. So, as I said, I told you that I would tell you how to trade these things, how to know when to do it. You do not want to watch the inverse ETF itself because the chart is distorted by that time value decay. So what you have to do instead is watch the actual vehicle. So if we're thinking about silver selling off, we're going to look at the chart of SLV, which is silver. So I'll punch in here SLV, and this is my chart of silver. And you can see that we had some weakness there on Friday, which is one of the reasons I'm a little bit concerned. I did a video on this on Saturday as well, and you can watch that video on the Stockscores YouTube channel. But I have a little bit of concern about silver and gold maybe selling off, at least in the short term. And here's the reason. Here's an upward trend line, and that upward trend line was broken Friday morning. So that would be our sell signal. And just on the day, it went from $48 down to $46. But let's go look at what the inverse ETF on silver did. So if I go to ZSL, and I'm going to punch in a 10-day chart, and what you can see is that the inverse ETF closed on Thursday around 1150, and it went to 1260, 1270 on Friday. So in other words, it went up a lot more than silver went down. And that's the power of these leveraged ETFs. Again, I got to emphasize, these are short-term trading vehicles. When you see weakness in the market, when you see upward trend lines getting broken, then you can take advantage of that by looking at the inverse ETFs. So let's just look at one more. We'll take a look at the S&P 500. So if I wanted to look at the conventional S&P 500 ETF, the symbol for that is SPY. And you can see that it's been going kind of straight up here, but it had a little break of trend about 6 days ago. If we start to move down through this floor at about 650, 660, then I think there's cause for concern. To see that, go to the 15-day chart, and you can see here that the first breakdown was there. That's when the upward trend was broken. And as a day trader, you could have bought the inverse ETF when it started to break down, and it had a nice little run to the downside. What I want to watch for here is this pattern is called a pennant pattern. Okay, so we've got this pennant pattern. If we break down through this floor from the pennant, then that implies that we're going to see lower prices ahead. What you would do is you don't short the SPY, you go buy one of those leveraged ETFs. So SDS is a leveraged ETF, and if we look at the 10-day chart there, you can see that it is in a pennant, but it is moving to the upside, and so you would expect a breakout to the upside on that. Now, a lot of this stuff is chart pattern reading. I'm going to be doing some free classes next week. On the 21st, I will teach you how to read charts. I will teach you the 6 elements of chart patterns. These are things that I've developed over the last 35 years of trading. These are all free. So on Tuesday, we're going to teach you the theory, how to read charts, how to understand risk management. On Wednesday, I will teach you my approach to investing in stocks. On Thursday, we'll focus on day and swing trading. And then on Saturday, I will talk about the tools I've created, the indicators I've created to help you do better in the market. All right, well, now it's time to get into my normal market analysis. Let's figure out if we are going to get a crash and what to watch for. So we'll jump back to the Stockscores website, and let's pull up that chart of SPY again, because we did have that break of trend, as I said, 6 days ago. And what we want to watch for is a breakdown from a falling top. If we can start to break down through here, then I think we're going to see more weakness. That hasn't happened yet. And if we go to the 3-year chart, you see it's still a relatively healthy market, just a little bit of sign of weakness last week, but we had that here and here and here. It's when you break the upward trend line like we had there in March that leads to more substantial selling pressure. All right, let's take a look at the NASDAQ market. QQQ is the symbol, and similar story, much like the S&P, we had that little breakdown. We're building a falling top. If we start to break down through this floor, then I'm concerned about more selling pressure. On the small cap market, IWM is the symbol, and it's actually holding up a little better, but it has also got more volatility. And there's a reason for that. I'll show you that later in the video, why the Russell, the small cap stocks, are outperforming the large caps. Let's take a look at the Toronto Stock Exchange, which has had a really good run to the upside on the back of strong mining and commodity prices, gold, silver, that sort of thing. But what you can see is that there's a lot of volatility here the last few weeks, and that shows investor uncertainty. So again, we've got a little double top. If we start to move through this floor, I think we could see more selling pressure, so watch for that. All right, let's get back to the charts, and we'll take a look at gold itself. As I said, a little bit of weakness there, but not breaking the trend line yet, so it's still okay, but really high volume on a sell-off day. That has me concerned that we'll see more weakness. Silver looks very similar to that. So again, I did a video on this on Saturday. You can check that out on the Stockscores YouTube channel. Let's take a look now at the US dollar. UUP is the symbol, and we have that little bit of weakness here, but generally still building optimism, just a pullback in the short term. If we go to the 3-year chart, we will see that it's trying to base and start to move up. Look at that 1-month chart. It is trending higher, so the outlook in the very short term is pretty good, but the longer term is still kind of neutral. How about Bitcoin? A little bit of weakness in Bitcoin this week. You can see the sell-off right here. And, I went bearish in the short term last week, and we're getting some follow through from that now. So there's our 1-month chart, that weakness there. But the 3-year is still okay. And the reason I can say it's okay is we're still holding that upward trend line. So it's more short-term weakness that I'm concerned about. All right, I wanted to talk about TLT, which is our bond market chart. And what you can see is that the bond market has been moving higher this week. That means the market's starting to expect that interest rates are going to be lowered. And that is why the IWM is doing reasonably well. So my ratings then, neutral in the short term for the US large cap and NASDAQ, but still long-term bullish. Small caps, I'm bullish on both time frames. Canadian stocks also neutral in the short term, long-term bullish. Gold still bullish long-term on both long-term and short-term, but a little bit concerned that we could see some selling pressure, so watch for that. Oil, short-term bearish, long-term neutral. US dollar, short-term bullish, long-term neutral. Bitcoin, I've lowered it to bearish 2 weeks ago, and we're getting the follow-through from that, long-term neutral. And bonds, looking better in the short term, bullish, but neutral in the long term. All right, now let's get into the trade of the week. This is a stock that was pretty strong on Friday and gave us a few entry signals. And one of the things we're noticing right now is a lot of the good trades are coming in the pre-market. And that's when this stock started to behave abnormally at about 7:30 Eastern. Had a little pullback here. You can see this pink dot. That's what I call a message candle. It was abnormal buying pressure breaking that pullback. So that was the first trade. And then we had this longer term pattern get broken with this action candle here, this little pink and yellow dot. And this is some of the stuff that I'll talk about in the webinars next week. What are action candles? What's behind them? How to use them to make money in the market? So make sure you're registered for those free classes on Stockscores this week. I think the best trade on RAMI was right here with an entry there, support right here for the stop. Ran up, went parabolic. This is what I call a bursting bubble candle, which is a decent reason to sell. On a relatively quiet trading day on Friday, there's still a few stocks that went up. This was one of them, and I hope that some of you were able to capture some profit from that stock. Well, hope you've enjoyed this video. If so, do me a favor, click on the like button, subscribe to the channel. Make sure you're registered for those classes next week. I'm certain you'll get a lot out of it. And as always, trade well.